Hey, thanks very much. Welcome back. Third quarter action begins right now. Chuck Malamut is here. The world is as it should be, and we'll get with Chuck in just a little bit. A lot to talk about. Chuck has a lengthy list of important updates. I'm going to float my theory about not only China and the fact that they're having their worst growth period in 25 years, and it's actually, I think, getting to the point where they have no growth. But also the fact that maybe some of these, I would think, not even maybe, I would think it's inevitable at the rate that oil is going, a lot of loans, big bank type loans could really have a problem. This is our weekly regular program all about your financial matters with Chuck Malamut, now in his 26th year. Here is the official financial advisor to the Hurley in the Morning program. Chuck leads the Malamut Group at Morgan Stanley's Northfield office. You can reach Chuck and his great team. They're my team. Make them yours. Tell them I sent you. 609-383-2010. That's 609-383-2010. And the following program that we have the privilege to present every Tuesday morning in the 8 o'clock hour is presented by Chuck Malamut, a financial advisor at Morgan Stanley. The information, views, and opinions expressed on this broadcast are those of Chuck, do not necessarily reflect those of Morgan Stanley or its affiliates. They are current as of the date of today's broadcast. They are subject to change without notice. Neither the information provided nor any opinion expressed herein constitutes a solicitation for the purchase or sale of any security. This presentation is for informational purposes only. Morgan Stanley Smith Barney, member SIPC. We're going to be back in just a moment with Chuck Malamut live here in studio. A lot to share as we continue. This is Harry Hurley, and I have to let you in on a product that has changed my life. It's called MyPillow. I used to wake up several times during the night. Now, for the first time in years, I wake up feeling great. You've known me for the past 25 years. I wouldn't try to sell you something or push a product that I didn't personally believe in. MyPillow works. Go to MyPillow.com right now. Check out the amazing American-made product. Owner Mike Lindell and his team care about your satisfaction. They will send you a pillow that fits just right, and then they will tell you how to use it. That's right. This pillow comes with actual instructions. They're so sure that you'll be satisfied that they offer a 10-year warranty and a 60-day money-back guarantee. Buy one of their pillows now and get one free. You won't have to buy a new pillow for the next 10 years. Take advantage of this offer by going to MyPillow.com or calling toll-free 800-951-8148. That's 800-951-8148. Use the promo code Hurley to buy one and get one free. We're back. It's 9 minutes past the hour. We'll get to Chuck in just a moment. I'm asking Chuck during that 60 seconds away when we were bragging about the MyPillow. Our good friend Gary Field is the latest of the Hurley in the Morning universe to not only purchase the pillows, he purchased 4, but not only to purchase them, but to get results from them. He sent me the most glowing text message right before we went on air this morning. It was very exciting. All right, I'm going to set the mood. Chuck, isn't that pretty? I'm going side to side. Look at Chuck. Chuck, look at me. Look at me. I'll do a little hula. You know what I got to start to do? What do they call that? Like a lei or something like that they put on you when you get off the plane? Tell me they're going to do that. When we get off the plane and we're in beautiful Hawaii, that they're going to do that. And we'll all be smiling. And it won't be 15 degrees and 20 and 30 mile an hour winds. It'll be 82 and the bluest water you've ever seen. In any event, this is Harry Hurley, and through Colette Vacations, I'm asking you to join me, Margie, and your fellow WPG Talk Radio 1450 guest listeners for a once-in-a-lifetime Hawaiian adventure featuring the 3 opulent islands of Oahu, Kauai, and Maui. We're going to take off from Philadelphia on September 22nd, and we'll be there through October 1st. If you haven't had enough and you want to stay 2 more nights, I love that they did this. There's an optional 2-night Big Island tour extension. We're not going to be there for it, Margie and I, but it is open to you, and I just want to point that out so that when you're making your plans, if that's something you'd like to do, it's readily available for you. All told, it's a luxurious 10 days. Total of 13 meals are included. All you have to do is dial toll-free to Colette Vacations, 800-581-8888, 8942. I'm not holding out on the financial information. It's just if you're single, double, triple, and you're doing different things like the 2-night Big Island Tour extension, they'll discuss all the rates with you. But I think it's an incredible value. And because you have more than 6 months, you could make 6 monthly payments and spread them out with even payments. You just have to put $250 down per person at the time that you make your reservation, and away we go. It's, in my view, once in a lifetime. I don't expect that we'll ever be there again. And it will be a sun-drenched Hawaiian Islands adventure that begins for us in Honolulu. A historic journey of Pearl Harbor, which really that's just something I've always wanted to do. We'll travel by naval launch to the white marble-clad USS Arizona Memorial. Days 1 through 3, we will be at the Hyatt Regency Waikiki. Days 4 through 6, Kauai Marriott Resort. Days 7 through 9 at the Hyatt Regency Maui Resort and Spa. And because of my hotel pedigree under the School of Malamut, I can tell you that I looked them up, and they're all 4-diamond, 4-star properties, just magnificent. And even guest listeners that have been hearing me, we on Monday of this week, we made it official that this would be happening. I have known for several weeks that we would be doing it, but the first time that we went public with it was this past Monday. And this is something we've been working on for more than a year. We looked at cruises, and I trust the experts at Colette Vacations, and they told me that this land-based version is superior to the cruise. And I fell in love with cruising when we went to Alaska 2 years ago. Maybe it's closer to 3 years now. I can't believe it. So we listened to the experts, and I was leaning towards a cruise, but they said, trust us. You're going to like this better. Your listeners will like this better. We get better feedback about this. So I've got to go with what the experts say. That's what you're supposed to do in life. You listen to people that know more than you, and you make better decisions in areas that you don't have as much experience as the experts. So Colette Vacations is standing by for a very special early in the morning WPG once-in-a-lifetime Hawaiian adventure. 800-581-8942. Refer to booking number 725-717. That's 725-717, and just let them know your situation. If you're going as a single, a double, a triple occupant, and mention early in the morning, please. Without further delay, we did all the pleasantries and announcing Chuck and his team just a couple of minutes ago. Chuck Malamut is here, and it is great to be with you, my friend.
Good morning, Harry. It's been a certainly a rough start in the beginning of 2016. I find it remarkable that we were here just a week ago, and the market, unfortunately, when you take a look at what happened with the market, volatility with a capital V seems to be back fairly significantly. So as we had the long weekend to kind of work through and think about and watch what was happening in Asia and in Europe. But, you know, if you take a look at last week, because, you know, the media has a tremendous appetite to be able to share with their audience negative news. And I'm not saying that what's happening in the market is a good thing. It's certainly, we're in that corrective mode, but it's, you know, when you start to have a crisis mode market or market and crisis special on MLK in the morning, you know, tracking the European markets, it's, you know, obviously they're looking to catch eyeballs. And but when you take a look at it, Harry, between Monday and Thursday of last week, the S&P was relatively flat as we got into Thursday's close. You know, if you remember, Thursday we had a pretty positive day and made up for the losses, and then but what happened on Friday, you know, all into itself, the benchmark, the S&P 500, we ended up at the lowest levels, down about, you know, with the Dow down about 390 for the day. Lowest level since October 2014.
Hey, Chuck, here's a little bit of good news. I know you don't sweat one day at a time, and I think that's the reason for your success of more than 30 years, but you do pay attention because I know your nature. Your attention to detail is the best that I've seen, and I've modeled my career after your skill sets. But there's the futures are looking very strong today.
You know, we had... If you take a look at yesterday, and again, I like to look at a one day event.
I understand. I even said that.
But, you know, so we get it as we walked out on Friday. We knew coming into Tuesday, the international markets had a lot to work through, and yesterday the European or the Asian markets, as expected, the Nikkei and the Hang Seng, I believe, did sell off, and the Hang Seng, which is the Chinese market, was relatively flat. Europe traded flat, which was good, not a lot of volatility. So I know that you mentioned a few minutes ago about growth, Chinese growth. What is the number? I mean, they came in, I think, at 6.8 or 6.9, which is pretty much on target, but down compared to where they've been in previous years. So the fact is that those markets rallied, European rallied, and now we're carrying over into the U.S. So the market was clearly oversold in the last couple of weeks. There's no doubt about it, and you get to the point in time where investors, especially the more so the retail investors and some institutionals, investors in hedge funds and the momentum trading folks. I mean, they basically sell everything and ask questions later. And perfect case in point last week, what's referred to as the FANG stocks, Facebook, Amazon, Netflix, Google, which is now Alphabet. I mean, they were taking chunks out of those stocks, 5, 7, 10%, because what was happening, everything was getting sold. First you sell your weakest holdings, and then you sell your strongest holdings. So, Harry, we've been down this road before. There's no doubt about it. And in talking with some clients over the weekend, you can sense a fair amount of despair. All the gains that we put in over the last several years in a relatively short period of time, basically get wiped out, or not wiped out, get reduced back, significantly. But if you take a look at where we've been now, we've had 2 corrections in excess of basically 10% since August, which is pretty much unheard of. So, are we resetting to where the global economy is today? Which obviously, if you take your cue from China, not the same kind of growth. I mean, if you look at their particular economy, they went from, they're now going to basically morph into a service-based economy because a lot of the building has been done. So this is going to affect industrials, it's going to affect material companies, and ultimately, as you can see in the price of crude, Harry, if I asked you a year ago, do you think they would cut the price 30, 40, 50% in a relatively short period of time? You think about where we were back just the beginning of January.
Yep. No, sir, I would not. But now we're wondering it went back over $30 a barrel, but is 20 in the future? And then if we see that, Chuck, are big banks in trouble with oil loans that are ready to implode?
Well, Harry, good question. And everything that I'm reading and seeing, 20 is doubtful. The mid-20s could be fairly likely to happen. You see some stability today, which is a really good sign. And your point is right on with respect to what's happening with bank earnings. Now, if you take a look, so far you've had Citi, J.P. Morgan, Wells Fargo, Bank of America, Morgan Stanley all report. And for the most part, either the revenue number is right on line, slightly over, slightly under, but they're beating, they're beating the bottom line. And the concern is, and as I think it was evidenced today, is there wasn't a lot of discussion, but what sort of oil-related bonds are sitting out there that the banks have taken on, which potentially could go the wrong way. I mean, if you take a look at oil and energy, look, we've been here before. I know that as I was driving yesterday, passing a few local gas stations, I think I saw $1.60 in one location, and then as I was watching the news. There was a war down, a gas war down in Texas, I believe. And
I talked about it. 3 gas stations are selling gasoline at 46 cents a gallon.
So my immediate thought was, well, at $1.60, I know that Harry's immediate thought was, and I was tempted to call you, but I figured I'd leave you alone.
You can drink gasoline now, Chuck. It's cheaper than water.
but the fact is that the price of gas, while it is down, is not, trading in line with the price of crude. I mean, and a perfect example, Harry, and for putting what is happening here locally aside, because the tax rates are obviously less in Jersey than they are outside with respect to to buying gas. But at the end of December, the price at the pump, nationally speaking, was $2.04. As of Friday, $2. The price of West Texas, $37 at the end of December, $29.50 on January 15th.
Do you remember, Chuck, I don't know how many months ago it was, but do you remember on your show when I posed the question, Chuck, could we see oil below $30 a barrel? I remember posing
and we found it highly unlikely.
So did I.
Because if you take a look at the price of crude or West Texas a year ago, it was about 46.5.
Chuck, you were on a roll. We've got to get this break in. We're about 4 minutes late. We're going to be right back. He is Chuck Malamut. A reminder for all of your financial planning needs, turn to the Malamut Group at Morgan Stanley's Northfield office for all of your financial planning needs, and you will learn, as I have over many, many years, Chuck's perfected concept of total asset management coupled with the all-important asset allocation. 609-383-2010, 609-383-2010, 609-383-2010.
If you're talking about it, Harry Hurley's talking about it right now. Call 609-407-1450. Hurley in the morning on WPG Talk Radio 1450 and WPG1450.com.
24 minutes, almost 25 minutes past the hour. This portion of our program also brought to us by New Jersey Assemblyman Chris Brown of the 2nd Legislative District, who always asks me to send his best regards to you and how much he appreciates your listenership when he's here on Hurley in the Morning. Again, we're brought to you this portion of our program by Assemblyman Chris Brown. Chuck, you were on a roll, and I actually had to interrupt you. You were saying.
Well, Harry, as we were chatting about oil and the fact that it was basically 46 and change a year ago for West Texas and now hovering just around 30, and the fact that you're going to see some consolidation, obviously, in that industry. There's no doubt about it, because you get to the point in time where it just gets too expensive to pull the oil out of the ground and produce it. So some of your marginal players will obviously be they'll either file or they'll be consumed. I mean, there was a deal yesterday in Canada that Suncor Energy took out another company which initially started months ago as a hostile takeover, now became a friendly bid. So you can kind of sense that again, some of these marginal players will be taken out, and it's unfortunately what happens is when you take a look at any particular industry and everyone gets punished as a result. And if you look at the way that some of the bonds are trading right now, they're trading 30, 40 points away from par, and these companies are still investment grade. So either Moody's or S&P and Fitch is certainly behind the 8 ball with their ratings, or the market has basically said this is what we think you are worth right now. And the other consideration, if you're going and to look at owning energy, and energy should be part of a portfolio, and if you're going to buy the common stock, I would certainly look at the dividend yields to make certain that the dividends are going to, in fact, remain intact. Kinder Morgan, for instance, a pipeline, it was one of the biggest MLPs several years ago. Investors fell in love with the stock. They converted from an MLP to an equity. This year, they had a very, very tough time. They ended up cutting their dividend to the common shareholder. That helped the company because it shored up the balance sheet. So cutting the dividend would ensure the fact that Kinder would still maintain an investment grade rating, which is, critical to a company. If you go beyond investment grade and you're now high yield, and you come to the debt markets, for a refinance or additional capital raise, you're talking several hundred basis points.
Hey, Chuck, I would accept that understandably well because I understand that the health, it's almost like you got to wish for the host to thrive because, then everybody dies. But some people don't like that when that dividend gets cut, do they? Because they're thinking more.
Well, you're talking about the common shareholder?
Yes.
Well, absolutely. I mean, if you're buying an equity with the mindset that the yield on that is, let's throw a number out. Let's say it's 4%, and you own it for a quarter or two, and the stock is basically holding its own, slightly higher, slightly lower. But you can sit back and collect that dividend. The problem is that when your dividend gets halved or eliminated, if you look at your stock price, it's going to trade differently.
Yeah.
So,
but of course, if they didn't do that, then the entire health of the instrument is dramatically injured, and you would do worse off probably.
Long term.
Yes.
Yeah, absolutely.
That's why I say I would understandably handle that well. Chuck, a couple of minutes before the bottom of the hour break, our esteemed listeners would hang me in the parking lot if I don't ask you about this. But the state of New Jersey wants to take over the city of Atlantic City. Now, from a purely – because I know being a former senior hotel executive, you've got a lot of love for the city. And, of course, even before that, when your dad owned hotels and you worked at them, you and Billy and all the boys as youngsters. So you have such a love for Atlantic City. The state of New Jersey taking over Atlantic City, but take it from a purely dispassionate point of view, because I think that's what we owe to our listeners in terms of the Malamut Financial Hour here on Early in the Morning. What do you think that means economically? That's a lot of things. That's debt that the state's probably going to cover. That would be how Wall Street would view this. I guess it would mean the state would be now taking ownership of many financial things. I guess what I'm saying is, as bad as a lot of people think it is here on the ground, could you make the case at a dispassionate, purely financial level that this is actually a good thing?
Harry, my initial reaction would be yes, but I am not thrilled, and I don't think any of us are thrilled with the government of the state of New Jersey.
Correct. And by the way, everybody knows this. I am against this, and this is only for discussion purposes.
So, if you had a stronger state and you had stronger leadership and the boots on the ground, so to speak, at the state level.
That had a record of running things well.
Successfully.
Yeah. Then
I would be all in. The problem, what I shiver and I think, and I know that Mayor Guardian has made comparisons to the city of Camden, and then you look at what the state allegedly is planning on doing with Atlantic City. It's going to be different. Look, there's no doubt about it. We are in very, very troubled times here. It's very unfortunate. We all have ourselves to blame for this, not just local government, but
how are we to blame?
Well, you think,
what did we do? We worked hard, we paid our taxes.
Well, you worked hard, you
paid
paid taxes, but, unfortunately what happened was I think a lot of us became somewhat complacent.
Too many eggs in one basket?
And we all thought that the golden goose, and I remember Harry vividly. It was like yesterday, walking, through the casino at the Golden Nugget and chatting with our CEO at the time, and the conversation was maybe 3 minutes at best, and it was something to the extent, "Wow, isn't this wonderful? How we were able to shield ourselves from the rest of the world." that this is in fact recession proof.
It was, yeah.
And back then it was. So now, the cards that we have been dealt,
pun intended.
Yeah, I guess. Are certainly different.
But if the state were to pay off Borgata, and of course they're going to sell the MUA to their friend, that's happening. I know it. They want to do a county police department. That's going to happen. And here's the difference: the keeping casinos out of North Jersey. We have a say in that. We can run a campaign. We can vote against it. We can voice our opinion against it. I'm pretty certain the state can just come in and do this. If he has the votes, Steve Sweeney in the Senate, and I was going to say Rudy Prieto, Vincent Prieto. Yeah, you're laughing because that's a guy that Chuck and I both know. I do that all the time in my mind. I've never said it out loud before until then. I almost wrote it in my column. I was writing my column 2 weeks ago, and I wrote Rudy Prieto. And I said, no, that's a casino executive that Chuck and I know. So if Prieto gets enough votes in the Assembly, and he just needs basically 21, or 41, and if Sweeney gets 21 in the Senate, they're going to take over Atlantic City.
Yeah, and I think, Harry...
Which is hilarious with their track record.
The fact that they're, you take over Atlantic City and then you build, you push for the approval of casinos in North Jersey.
Now, and them having control of Atlantic City helps them while they're pushing for casinos in North Jersey.
Oh, obviously. So it's
all part of their plan.
And I know that there's been a number of local people that are, pretty well respected, and I read a few, and I won't get any particular names, but I was kind of astonished to see that they backed the state in their entirety. And like I said, Harry, if this was a really well-run state and we had pristine ratings, double A plus, triple, I'd be all in. I say, I'm for this.
But you also have to add to that, they've had a city fiscal monitor in Ed Sesdeli there for all these years, the entire Guardian mayoralship, and even before him in the Langford era, Sesdeli. And then you have Kevin Lavin that they're paying like $2 million to. He's now finished, but he was there. So they're almost acting like the local people didn't get it done, but it was the state that was calling all the shots. They couldn't hire buy a paperclip almost without Ed Sesdeli saying, yeah, you need that paperclip. Every job, every hiring, every firing. So the state was there the whole time. Now they pretend that Atlantic City messed it all up and they have to come in and fix it. And that is intellectually dishonest.
Absolutely, Harry. There's no doubt about it. And I can't imagine... understanding the state of New Jersey's track record, and I'm sure there's some politicians that might not care to hear this, but I think they would fail miserably if they were to run a business.
Yeah, I agree.
And, it is what it is, and, you make a statement saying, well, the state's going to come in and they're going to pay for this and pay for that. Well, the state, you're paying for it, and
ironically,
I'm paying for it.
And even the ones that do run businesses don't run them the way they run their governmental affairs. They do it very, very differently than they would. I mean, Mazzeo, for example, does not run Mazzio's the way, and his family, because there's a lot of people involved there. They don't run it the way he has run his political career. There's no way they would be here for generations if they did. So they run it differently. We can continue this if Chuck wants. We can go further. I know Chuck has a lot of ground to cover, the Fed, corporate earnings, and anything else. When we come back, it's Chuck Malamut on Your Financial Matters weekly here on Hurley in the Morning, our 26th year, well underway. And you can reach Chuck and the Malamut Group at Morgan Stanley's Northfield office for all of your financial planning needs by calling 609-383-2010, 609-383-2010. We'll be back in just a few minutes, 2 minutes, I think, exactly.
Hi, it's Glenn Beck, and I'm coming up at 10 this morning, then Sean Hannity at 3. Now, more Hurley in the Morning on WPG, Talk Radio 1450.
Thank you very much. Welcome back. 41 minutes past the hour. Chuck, you were saying.
Hey, Harry, why don't we kind of shift gears a little bit, because I think, we could probably
talk about that all day.
We could dedicate hours to Atlantic City.
Yep.
And
I'm glad we touched on it.
Yeah. So a lot of what has obviously transpired.
Oh, by the way, quick commercial. We touched on it in the last segment with Chuck. Tonight in the 7 o'clock hour, it is your really first opportunity for an extended period to hear from Atlantic City Mayor Don Guardian. It's our award-winning Ask the Mayor program in a special hour tonight, the 7 p.m. hour, right here on WPG Talk Radio 1450. We'll be in studio taking your phone calls, your comments, and your questions. And I would imagine there are a lot of questions relative to the state's desire to take over Atlantic City, the state's desire to push casinos and move casinos outside of Atlantic City for the first time ever to North Jersey specifically, and also will Governor Christie sometime in the next couple of hours, he has until 12 noon to sign the pilot legislation, or all of that is back to square one. It's a big day.
Is he in state to sign, or
he doesn't have to
signs on the road?
He can sign on the road.
Okay.
Yep. Big day here.
Yeah.
Because if that's not signed, that's more uncertainty. But go ahead.
I think Harry, I will certainly be listening. I think for sure.
Thank you.
Hopefully, we'll get a lot more information than we had, say, a week ago. But I think a lot. Let's shift back here because we only have a couple minutes left, and let's talk a little bit about China because we really didn't talk about it. As we started the hour, investors for the most part, we had a really it's probably the roughest start we've had since the Great Depression, and
it is.
There's a lot of worries about China, oil, and our economy, and all of that kind of prompted that global market. I don't want to call it a rout because it was a sell-off. It was a correction. So if you think about it, I don't really think there's much of a reason to walk away from equities. I mean, you might have some special situations where things haven't worked and you want to take the write-off or get into a different company within the same industry. I mean, I get all that, but to just abandon equities because the economy in China is slowing, I don't think, Harry, that's a really good thing to do.
Agreed.
But it's and what I'm saying here, it's nothing new. I mean, the stock market moves in China while there's a lot of volatility, and that market is pretty much a closed market. As we mentioned before, you and I cannot buy it. About 80% of that market is retail, which is and that market all to itself is about 25 years old. So there's a lot of learning to do, and compared to what we've gone through here. So the underlying economic or company fundamentals here in the U.S., I think we're pretty much well insulated from a slowing in China.
So if they slow, and they are, that does not necessarily infect us?
The biggest, we had the issue that we had to be concerned about for these multinational companies to do well is the fact that, you're going to think I'm unpatriotic when I make this statement, but we really want the dollar to weaken somewhat. Ooh. It's got it, because to ship your goods and services, export them overseas, with a rising dollar becomes more expensive for the importers.
Isn't it amazing how, because we've been doing this now in our 26th year, we have talked about how at different times the dollar was weak, and now the dollar is too strong.
Yeah. It's kind of silly. So
yeah, it's amazing.
And if you kind of shift gears here for a minute, if you look at oil, the prices are falling. They're all pointing to demand. I think it's more, Harry, overproduction.
When oil prices fall like this, does all of the energy sector take it
Absolutely.
in the neck?
Absolutely. I mean, if you take a look at the last year to date, energy is down roughly 9%. Not the worst performing sector. You have materials and financials and technology that have performed worse. But you think about what has happened to energy along the way to get to the point where it is right now. So, as I mentioned, we think that oil prices are falling more because of the overproduction and the fact that more oil is coming online, just last week. I mean, I won't even get into what happened with our president but I'm not allowed to talk about that, so I won't. But
they're happy in Iran right
Yeah,
now.
they are very happy. But so lower oil prices are certainly they drag on investment and energy-linked employment in the U.S. So as a result of that, those low oil prices, we think, because energy obviously is part of the economy but not a major part of the economy, we don't think it's going to get us into a recession.
Chuck, follow up, because
recession, Harry.
I get it. I get it. You said the R word. Some are saying it, but we're not going to say it here, and I'm with you. What's the difference? How can you explain the difference between a downturn and a buying opportunity? My former boss, Donald Trump, he took full advantage of a downturn in real estate, and he bought up country clubs and all kinds of real estate at tremendous prices, buying prices. How would you describe the difference between a downturn versus a buying opportunity?
Well, Harry, I think you got to look at sentiment and bullish versus bearish sentiment, and where we are right now. Investors are more bearish right now than any time since last July. So that should be what we refer to as a contra-indicator, where everyone's trying to exit the door. You can get in on the other side at relatively low levels.
Takes a stomach for that, though.
What investors are faced with, and again, after doing this for almost 30 years, Harry, I just it doesn't change. I mean, investor sentiment. I mean, if you like something at 40 and you're okay with it at 30 and you absolutely hate it at 20, I mean, it's just the opposite of when you go shopping.
And then somebody else looks at that and says, that's a heck of a buying opportunity, and they get it at 20.
Yeah. So, and I think right now, you're a guy and I'm a guy with glass half full. Mm-hmm. I think the market in a relatively short period of time, kind of reversed course, and the glass became half empty. So I think what has to happen here, Harry, is, while our market is sentiment driven in the short run, you got to look at companies and economic fundamentals in the long run. So this earnings period, companies are now coming, and they're going to come fast and furious. If we beat expectations, and if we get any sort of glimmer of hope per se from these respective CEOs, mm-hmm. I think that will be somewhat positive, for the markets. I mean, today, and I don't profess to be a technician, I'm not going to do that. But, the market was clearly oversold. I mean, everybody kept saying it. There was no doubt about it. So now you're at a point where you look at, today, and is today considered what they call a dead cat bounce? Because what happens from a technical perspective, you put your bottom in, you rally, and then you come back to the bottom. So the question is, did we hit that bottom on Friday? And, we're going to now move higher and then retest, or is this sort of just a pause? And I think that a lot of it is, going to be predicated on earnings.
Give us one more minute, Chuck. You're already on overtime, and then we got to get a quick break in, too. So we got to get out of here soon. And I know you have to get out of here really quick because you're staying longer than you usually do. We didn't talk about, and nobody's really talking about, so I think we should talk about it, or you should talk about it, the Fed. Nobody's saying the Fed lately.
No, good point, Harry. And we're not going to cover it in a minute, but a lot of strategists are now saying, everybody wanted the Fed to make a move, and they didn't make a move in September, and the markets had a tough time with it. So I think that, everybody's now saying the Fed had so much pressure to make a move in December, and all the reports that they're reviewing actually deteriorated from where they were in the fall. But it kind of forced their hand to make a move. Now, there are some Fed members that are banging the table, saying in 2016, we're going to get 4 rate hikes. There's now a 25% chance, when you handicap this, of the Fed making a move in March. It was initially 75 to 80. So
they went from an environment of stronger fundamentals and did not pull the trigger to one that was weaker, and they did pull the trigger. But I totally agree with you, because they almost felt like they had to. It was sort of built in that they had to. But it's not built in that they have to keep going, though.
Well, and the other thing, look, Harry, I've actually read and heard that some strategists were calling out for the Fed to actually
take it back,
take the rate hike back.
I would love that.
And
now, would markets
come with more QE.
Now, let me ask you this: would that be something the markets would embrace, or would that be a sign of weakness?
I'm not sure, Harry. I think my initial reaction would be...
If you pull back on the 25 basis points increase and then you issue more quantitative easing, oh my gosh.
I think initially I don't think the markets would react well to that.
I don't think so
the
either.
Markets, as you mentioned on numerous times in our shows, the markets do not like uncertainty. And that's where we are right now. So if the Fed were to reverse their course and actually take that rate hike back, I don't think the markets would react well. I think the markets could react well if the Fed went on hold. And if you look at, Harry, where the 10-year is trading right around 2%, all the expectations were that was going to be pushing 3%, and it's not. So is the markets, in fact, leading the Fed, or is the Fed leading the markets?
Very, very insightful. I think the Fed is actually being led and not leading.
Well, we'll find out in the next month. That's for sure. Yeah. Because again, the Fed, professes to be independent, not political. We are in a year of uncertainty, political events that we didn't even touch on, are obviously very, very important to the market. So, as someone said to me, I heard the other day, we're 1 year and now 1 day away. So I know you have your counter on.
Do I have my counter?
So,
do I have my counter? Hold on. I got one on my desk at home that was given to me by a very, very good friend. I don't know if he wants to admit to having given it to me, but I'll show you my counter, Chuck. And it's getting very interesting because 1 year from tomorrow, hold on, somebody just texted me. There it is.
I love the screen. It's perfect, Harry.
Yeah.
You should send that to me.
Yeah. After you leave, I will tell people what's on that screen. I don't want you to be held accountable.
Thank you. But if you can send that to me, I'd like to add that to my phone if you don't mind.
Yes.
Just to remind me every day.
Yes.
But anyway, look, this has been. I think to kind of conclude, I think what your listeners need to be cautious of here is that, look, the market's going to be faced with a fair amount of volatility. Try not to get consumed with all the negative events, because your psychology will force you to do things that a long-term investor doesn't do. Do what Warren Buffett does. He looks for opportunities that are inexpensive, cheap, so to speak. And, when everybody's giddy, he's selling. When everybody is depressed and upset, he's a buyer. But
Chuck,
as you mentioned, you need a strong stomach to do that.
Yep. Thank you, Chuck. Thanks for the OT.
Hey, Harry, good hour. Thanks for having me.
Great hour. You've been listening to Chuck Malamut in his 26th year here with us on the Hurley in the Morning program. He leads his group. Chuck is managing director at Morgan Stanley's Northfield office, 609-383-2010, in charge of his group, the Malamut Group. The following program you've listened to was presented by Chuck. The information, views, and opinions expressed on this broadcast are those of Chuck Malamut, do not necessarily reflect those of Morgan Stanley or its affiliates. They are current as of the date of this broadcast, are subject to change without notice. Neither the information provided nor any opinion expressed herein constitutes a solicitation for the purchase or sale of any security. This presentation is for informational purposes only. Morgan Stanley Smith Barney, member SIPC. We'll be back in a few minutes. Dr. Newkirk coming up, and then Wide Open Forum to close out.